The Greater Boston area has a growing need for affordable housing, but there's also a problem with diminishing supply. Much of that supply, with rents subsidized by the government, can be found in private developments. And when developers get to the end of their obligation to the government, they can take their housing units and put them on the market where the rents could be much higher. A new report from the Federal Reserve Bank of Boston says that's a big problem for renters of extremely low income, but also for the regional economy. We'd like to welcome the author of the study from the bank's research department, a policy analyst with the New England Public Policy Center, Nicholas Chiumenti. Thank you very much for being with us, Nicholas.
Thanks for having me.
First of all, let's talk about the size of this problem, those units that are not going to be affordable within a few years.
So we've found in this report that for this group, the extremely low income group, by 2025, there's going to be almost a little over 9,000 what we called affordable and available units that are set to expire completely. And so that means that all of the subsidies that go into making that unit affordable, making rent low enough for this low income population to be able to pay it, are potentially going to just revert back to the private market, meaning that rents will increase and they will no longer be income restricted.
Now, I imagine that some of these rental agreements go back to a time when nobody imagined the market was going to be as hot as it is now. So what's going to happen to these developments, you think?
Well, I think for the ones that expire completely, that aren't going to be preserved, they will likely return to the private market. So the rents will increase just like they have for the market in general in Massachusetts. For those that we are able to preserve, either through additional subsidies or through local land use restrictions, those could remain affordable. They might not remain affordable just for this extremely low income group, but there are other low income groups that they might be able to remain accessible for.
Well, talk a little bit about the households of extremely low income, because I think here in Boston you've got some tables, and I guess within the city they're about 1/3 of all the people renting, at least the households renting.
Yeah, so of all renters, Boston obviously has by far the most renters in the state. It just has the largest population, and it also has the most what we call the extremely low income population. And so this is a group that makes at or less than 30% of the area median income. And for a family of four, this was between $20,000 and $30,000 a year in 2016. So about 50,000 of these households, these renter households, live in Boston in 2016. And that's by far the most of any community, any city or town in Massachusetts.
And by the way, you're kind of conservative with these figures. You're not counting the people who are going to get a graduate degree in a couple of years and get a big pay raise, right?
That's true, and we're not including students in this estimate in order to get sort of a more long-term consideration of what this group might be. But certainly, students, people who are in school, who've returned to school, are all competing for the same affordable units, rental housing that this extremely low income population is.
Now, one of the things you also try to measure in your report is rent burden, and I guess there could be two kinds. There's one kind of burden when you're getting a subsidy, and another when you're not getting a subsidy. What did you find?
So we found that of the extremely low income households, almost 80%, about 79%, were what we called rent burden, which means they pay at least 30% of their incomes towards rent. But greater than that, there's what we called severely rent burden, which is paying over half of your annual income towards rent. And for ELI households, that's almost 60% of that population. So the majority of this group is basically paying most, if not all, of their household income, their annual household income on housing costs. So that's rent plus utilities.
What do you think has to be done to make up the supply gap that's going to get so much bigger?
So we have a number of tools in the state that I think can be useful. One is subsidies, right? Both from the federal government and from Massachusetts. So certainly preserving and advocating for additional funding at the federal level for things like housing choice vouchers or project-based Section 8. But also at the state level, with there's the Massachusetts Rental Voucher Program, which does a very good job at providing affordable housing for homeless and extremely low-income households. But growing that pot of money to be that resource is important. But there's also we just need more units. We need to incentivize developers to build more affordably, to build in greater density and in places where we haven't traditionally built in the past.
That was one thing that seems it might be a bit controversial, because before, if you gave somebody a voucher, they could find a place in Dorchester or Hyde Park. But now, it's not as easy to do that. So where do they go?
Well, eventually they might just end up leaving. They might move out of the state, they might move out of Boston, and that's a big issue in terms of the long-term success of the economy. That's a large, portion of the labor force that could potentially just leave for affordability issues. They also move to cheaper areas, but these cheaper areas also tend to provide less in terms of income. One of the things we found was even in areas in Western Massachusetts, places with low rents, there were still issues of rent burden, of people, these households paying large amounts of their income towards rent.
Now, I know with some households, maybe they're older, they're either retired or close to that, but with other households, if there are no jobs close to where they live, you still got a problem, right?
Yes, yeah, and so where these units are going to be located is going to be very important. I mean, the majority of this population we found was older single adults. So it could be that they don't need to be located near sources of jobs. They may be health centers, and those kinds of services are more important. But for those young families, I mean, having access to the job center that is Boston, that is metro, the eastern part of the state, is very important.
Now, the other thing here too is how the housing market affects the supply of subsidized units, because if the market's really hot and the market rents are really high, I guess you have to have deeper subsidies per unit then, right?
Yeah, so there's always caps on the amount of units or the amount of money that can be spent by these programs, but of course, as the median keeps rising, in order to keep funding the same number of units, you have to spend more and more. So a household that is only able to afford $100 a month, but the only apartments that are available are $2,000 a month, well, that's $1,900 that you have to make up in terms of government money, in terms of subsidies. And as that increases, so does that subsidy.
This has been in the news, and we're talking about a new report from the Federal Reserve Bank of Boston with Nicholas Chiumenti. Nicholas, what about things that could be done to increase supply, or at least take some of that tightness out of the market? The Federal Reserve Bank, you regulate banks and lending. Is there any help in that direction for this, probably?
So there are a lot of programs at the state level to build and preserve affordable units. Recently in 2018, the state passed a housing bond bill that was very much focused on providing, not just constructing new units, but preserving those units that are available. And there's a lot of interplay between the rental market and the homeownership market. So as people who aren't able to afford homes, they stay and they keep renting, well, that takes up supply in the rental market. So building new single-family homes is also important.
Another thing that I see here is your report is pointing out that this is not just a problem for renters of extremely low income, or even the home buyers you just mentioned. You're talking about the whole regional economy, right?
Yes, I mean, basically every low-income group, there's a number of different strata of income strata. Essentially, they're all really struggling to pay rent. It's not just the extremely low-income group, although they do feel it more acutely than any of the sort of higher income groups, although these are not wealthy households by any means.
But I imagine that there must be some consequences for the economy in the sense of if people want to see job growth. I mean, you can't grow the jobs if people can't live there.
Exactly. So eventually, as people aren't able to afford units, either they move or they stop moving into the city or the region in general, well, then employers will stop locating here as well because they can't find the people they need to fill their positions. And then eventually they either pack up or move elsewhere or stop coming altogether.
Well, finally, you've got the whole report and all those graphs so
Yes.
people can read them pretty easily?
Yes, so the whole report is available online at thebostonfed.org. We are the New England Public Policy Center, and included with the online report, we also have an interactive mapping tool as well as the data behind the report as well.
Thank you very much for being with us.
Thank you.
Nicholas Chiumenti from the Federal Reserve Bank of Boston.